Markets remain in turmoil, and the crypto market has continued to crash overnight, although we're seeing a pretty nice bounce, which I personally think is a local bottom. But hey, I'm an eternal optimist, so you know exactly what you're going to get from me. Now, can the crypto market survive this? Can it survive what happened with Luna? Well, besides the fact that if you look at the thumbnail, myself and the guests look like a New Kids on the Block reunion tour. Besides that, I've got a very brilliant panel today. Mark Yusko, Dave Weisberg, Matthew Roszak, and Anthony Scaramucci. People much smarter than myself. I can't wait to listen and learn and hear their thoughts on everything that's coming and whether crypto can survive and how. Here we go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. I'm going to go ahead and skip all the introductions and niceties. First of all, just say I hope that all of you are hanging in there. I have a lot of friends who are, I would say, exceptionally overexposed to Luna, UST. Obviously, Anchor Protocol was very popular, and people were staking it there for 20% yields. And I've heard some horror stories. You know, I've had Mike McGlone on a couple times of late, and each time he said, you know, I think we're coming into one of those periods where you start to see, unfortunately, the divorces, suicides, margin calls, and it feels like with what's happening in crypto, maybe we're right there, but hopefully that also is a signal that we are approaching the bottom. But I'm not the guy to discuss that. I'm going to bring on our panel right now, of course, Mark Yusko from Morgan Creek, Dave Weisberger from CoinRoutes, Matthew Roszak from Block, and Anthony Scaramucci from Skybridge. How are you guys doing today? What a time to be alive.
I'm just trying to keep my hair, Scott. That's my goal. I mean, I'm probably going to lose my portfolio, but I don't want to go bald in this situation.
The thing is, you need the money from the portfolio to get the plugs. You can't be broke when the hair goes.
Well, and I apologize, Scott. I was saying earlier, I have this massive sty, so I feel like Quasimodo today. So I'm just going to stand around like this all day. I know I do.
Mark,
need
just
an iPad.
apply some Bitcoin to that. Apply some Bitcoin. It'll.
There we go.
Heat it up in the microwave and hot compress your Bitcoin.
But the problem is Bitcoin hot or cold? That's the problem. So
cold compress.
Very cold. Well, everything's cold. But one thing before we start, Scott, you brought it up. Look, we all know people who are really struggling here, and I see people a lot of times. They tweet out, "Hey, here's this hotline number." Don't wait for people to reach out. Everyone knows somebody. Reach out right now, not right now, but after this, and call somebody, because people need help and they need support, and we all are struggling in this time. So I say hashtag be the hotline. Don't tweet out a hotline. Be the hotline.
It's a real phenomenon. Even the earliest days of Bitcoin, that happened. And they're terrible stories. And a lot of new people, new investors, new adopters of crypto don't know how to deal with it, have not been through market cycles. And so if you have a friend, put your arm around them, reach out, and it's very important.
Yeah, I mean, listen, we all love to, we've all been here before, right? Some of you probably more times than myself, obviously in crypto, but other markets. There's nothing new here, but in this case, we do have this sort of Luna contagion, I think a loss of trust in the market. So in your opinions, is this time different, or does it just feel that way when you're in it?
I mean, it's kind of weird. I mean, being through enough of these market cycles, and I started into the space in 2012, 2013. So seeing every market cycle, the scar tissue is, on both arms is real. But in this case, seeing Luna crater like it has is incredible to watch. And then, the macro thesis of seeing people go from this uncorrelated asset of crypto is still not in focus. That lily pad is there. There's just not enough people that hold crypto, that have the conduits to do that quickly and forklift over. And also the broader macro backdrop of inflation, supply chain, COVID hangover, all these things aren't helpful. The thesis is still there. The premise is strong. And your time frame, if you're a trader, it's really hard. If you're an investor, this is the time to really think deeply about how to, go deeper and continue to play this out, because this is, again, a generational shift, a generational opportunity for builders and investors. And these ups and downs are absolutely brutal, but the convictions got to stay the same. These downturns are like a Darwinian hand that tests people. When it goes up, and everybody's excited, and everybody jumps on, and people's brothers, sisters, neighbors, hairdressers start to really ape in that we're sitting on the sidelines because it's up and it's in the dialogue. And then, you have these cycles, and these cycles always happen, and it tests people, and it's a really hard moment. The only thing I would say is that, Bitcoin, crypto is for sale right now. This is an unprecedented opportunity for people to get in, double down, rethink how they allocate capital, and reconsider, how they look at Bitcoin and crypto, because it's truly for sale.
Yeah. If I'm going to call a hotline, I want Matthew Roszak on the other side of the hotline. Okay? I just want you to. I'm going to need your cell number before we leave here.
There you go. I agree. I just want to have a couple things. One, I didn't get the memo for the black T-shirt. Damn it. But and actually, I have a great one. It says "Embrace volatility."
We're in mourning, Yusko. We're in mourning.
Yeah,
okay, it's like Jews and Italians. Okay, we're sitting here at the funeral.
All right. Well, okay, I will go change right after this. But there's nothing new in this world. This is not new. This is not unexpected. Someone said the other day, look, this is like CDOs all over, except it's more liquid and it moves faster. So my thing on this is, for the last 8-9 months, I've been talking about crypto winter. In fact, I'm going to do a reveal. I'm actually even wearing my crypto winter socks. So
cathartic.
And the reason is, and people were like bitching at me, like, Yusko, the cycle's been eradicated. What are you talking about, crypto winter? Like, no, the cycle's not been eradicated. We have 4 seasons. We have winter, we have spring, we have summer, we have fall. Winter is good. It cleanses. We need winter for spring and summer to actually happen. Because if you let the bad stuff persist, we're seeing this in the traditional markets, free money saved all these crappy companies, and now they're going to go away. And that's not, I feel badly for the people who are involved in those businesses, but there are, not everything should exist. It's like participation trophy, right? I tell a story. My son went 0-10 his first soccer season, got a medal. Came home, took the medal, threw it in the trash. My wife's like, "What are you doing?" I'm like, you don't get a medal for 0-10. You do not get a medal for 0-10. And that's where we are today. And look, to use the word stablecoin with something that owns assets that have 80 vol, that pisses me off. It pisses me off. And to put that out there to people as a stable asset is wrong on every level. And I don't know. I don't want to get too.
We have a big problem with the way that we identify and name things in this space. Cryptocurrency itself is a horrible misnomer that should be absolutely thrown away and burned in the garbage can. And calling everything a stable coin just because it's theoretically pegged to $1 is a very similar problem. I was encouraged. Toomey, when he was questioning Janet Yellen the other day, actually made the clarification. This is an algorithmic stable coin, not a backed stable coin. I was impressed to see somebody even mention it, but you're absolutely right. You cannot identify these things and throw them in the same basket.
Because you expect that word stable to mean stable, and that's like a parking lot to hold stuff while before you do stuff. And so that's a misnomer. And seeing Luna, it's like a real money pressure test and example of what happens when when the edge cases come into focus. And we saw that get pressure tested. And look, this is part of the crypto experiment, part of DeFi. These need to get pressure tested. This has to happen. These are ultimately going to be $1 trillion networks without breaking a sweat. And so seeing this calamity is horrific to watch. But we need to pressure test all these things up and down, left and right, in order for true adoption and a stable coin to be stable and the rest of it. So we're still in that experimental phase for these algorithmic stable coins. There will be others. There are, several that I'm looking at, and I think it has incredible utility. But we've got, a long way to go.
I mean, one of the hallmarks of good securities regulation is better disclosure. That was literally what happened out of the crash, out of the original crash. That was what the original acts were. Of course, since those laws were written with disclosures that were written before the internet existed, the disclosures that are in the securities world are borderline useless to individuals. Nobody reads Edgar. Nobody cares about the forms that they're filed with the SEC, except for Wall Street analysts. And, the obvious answer, and, Ryan Selkis talks about this all the time, probably with too much vitriol for people in the SEC to actually listen to, but he talks about it and he's right, that what's needed is industry crafted rules to have better disclosures. One of the most obvious ones is if you say the word stablecoin, it literally has to be a stablecoin. An algorithmic stablecoin is an oxymoron. It always has been. I said it back with basis. I said it with this. I'll say it with everything. It doesn't matter. If what you're really doing is trying to peg a currency to something with an external mechanism. I was talking the other day with someone. I said, the only difference between this situation and the Malaysian ringgit and some of the other dollar-backed currencies that went in through the Asian contagion, those of us old enough to remember that and what happened, is that in those cases, those governments were able to institute capital controls. And Do Kwon couldn't because it's an open ecosystem. Now, it's good and bad. I mean, one could argue capital controls are incredibly problematic, but the fact of the matter is, nobody would have claimed that that Malaysian currency was pari passu with the dollar. Unless you're in Malaysia, you were never going to use it for that. Yet here we had millions of people using a currency that isn't pari passu with USDC or even Tether, and using it for that, thinking it was pari passu, and it wasn't. And that is a huge disclosure problem.
Can I ask you a question, Dave, if you don't mind?
Yeah, sure.
Do you think that the 20% yield was also a big enticement, particularly for neophyte investors? I mean, we wrote about it saying it was unstable. We avoided it, of course. You guys may know I'm tight with Sam Bankman-Fried. He was very negative on it. But when you have a 20% yield out there, and you're young or you're not experienced, you haven't gone through the cycles that the four of us have gone through, do you think that really pulled a lot of people in?
Yeah, I mean, but look, being old enough to remember the junk bond, situation, and a lot of blame, and I talked with Mike Piawar before he went down to join the Milken Institute. But those of us who remember, people attracted by junk bond yields too in retail portfolios. The difference is we didn't have an internet for people to yell, complain, get on Reddit groups about it, but there were plenty of bonds that defaulted that had huge yields. The reality is there should be some notion of disclaimer. When the problem in this case that makes it worse is, no offense to any of the people who fall into this category, but a lot of crypto influencers, people who are considered to be at the top of their game, claimed or made, if not claimed, their actions would allow people to reasonably believe that this 20% yield was there because of some magic reason, not because of extra risk, and that it was pari passu. And that's the problem here. I mean, the problem here is there was no really reasonable disclosure, and there is no there's some very smart people who I have huge respect for that got fooled here too.
Yeah, that's what I was going to say. You say obviously that retail or neophytes are fooled. UST was the darling of DeFi hedge funds.
I mean, it's
right.
It's
There's very smart money that was very overexposed and doubled down very hard in the last 2 days.
Right, and look, I have a good friend who has box seats to the Nationals, and his seats have, and in fact, if you look at the Washington National Stadium, Terra is literally one of the biggest sponsors there. And so in DC, of all places, you have that. So yeah, it's an issue. But the truth of the matter is, if it were not called a stable coin, if it was called an algorithmically stabled asset, and what you're really talking about, honestly, I mean, in traditional terms, is You're using effectively a version of a derivative or a managed derivative in order to keep value. And what you're really trying to do is smooth out volatility. So you're basically selling calls and buying puts. But everyone who knows that if you're or selling calls and selling puts, whichever you want to look at it, if you're selling volatility, that it's a strategy that 99 times out of 100 or 9 times out of 10, depending on what you're selling, works. But that one time is catastrophic. And so people need to understand that, and it wasn't understood. And, they created a shock to the market. And let us not forget that this is happening at the same time as all risk assets are getting monkey hammered. I love that one that they use.
Yeah.
Right. It's so, the NASDAQ drops 4%. Yeah. Risk assets are going to go down at the same time. And so, this is all happening. It's one of those perfect storms.
Yeah. But the real perfect storm, and I hate the term perfect storm because Marky Mark went down with the ship, and that's not what we want to talk about here. But the real problem is leverage. Look, leverage can never, ever, ever make a bad investment good. Not ever. But it can, and often does, and is right now, making good investments bad. And it's everywhere. The traditional markets are the most over-levered they have ever been. And I have a nice relationship with Michael Gad, and he and I went back and forth this morning, and he's like, there's just been so much death and destruction because all these people levered up, and there's been $1.7 trillion wiped out of crypto. I'm like, yeah, twice that has been wiped out in Fangman. And Fangman's much more widely held. And yes, I will admit that the average leverage per crypto participant is materially higher than the average leverage per traditional market. That doesn't mean there aren't traditional market participants that are 20 times levered and up, and they've been wiped out, absolutely wiped out, just like the people here. The problem is I don't believe this really, but I'm starting to actually come around to it, that, I won't name names, but someone that I know well, might be a family member, called me up and said, they stole my Bitcoin. I said, what are you talking about? He says, well, I put it on BitMEX and I stopped. No one stole your Bitcoin, you idiot. You levered up, you got a margin call, and they seized your collateral. Now, someone said to me, well, there are companies out there. That is their business strategy. They are trying to lure people in to over-lever and then seize their collateral. I'm like, oh, shit. Okay. And I don't want to point fingers at anybody. I'm not accusing anybody of anything. But if that is the case, yeah, that's bad. That's bad. Just like, luring people in with 20%. I mean, it's literally like waving candy in front of kids with the van. I mean, it's bad stuff. Boy, I date myself with that reference right there.
Yeah, my generation too. You're good.
Well, here's the thing I would tell viewers and listeners off of everything you guys are saying. This is my 8th time. I was there for the 87 crash. I got blown out in the United Airline merger that failed. I got destroyed during the Gulf War. Then David Askin blew up the mortgage market. I mean, I could keep going. Okay, 1998, long-term capital management. Stocks were going to zero.
Russia default.
2000. Well, this does feel like March of 2000, where the tech wrecked. And I want to go back to something that Mark said, because when you're focused on the wrong things, and at that time it was eyeballs at Yahoo, and how many eyeballs were going to the etoys.com, whatever it was called, website. And many of those companies went out of business in the tech wreck. But if you were patient and you were glued to the thesis, and so the question I have for all 4 of you, is the thesis intact? When I read Yusko's writings, is the thesis intact where a good portion of our society is going to be delayered by the blockchain, and there are use cases for these layer ones? And will Bitcoin be on that platform to be used as a token, a tender, to transact in a permissionless way peer-to-peer. So that's my question for all four of you. If that's intact, we got to go back to work. This is the most exciting time that we could ever possibly have, because now we're all startups again at a time where there's great wreckage and probably technical overselling in the market. So that's my question. Is it still intact, Mark?
100%. Look, Anthony.
Well, I know the answer to it.
No.
I
know you know the answer, but questions are better than answers, right? We live in a society that rewards answers, right? Go to school, memorize stuff, regurgitate it back. Well, no. The skill is to do what Anthony just did, is to crystallize and ask the right questions. And that is the question to ask. And the answer is unequivocally yes, right? It is impossible. And I'm prone to hyperbole, and people say, oh, Yusko, you're full of shit. Okay, but here's the thing. There's no chance, zero. You're not supposed to say zero. No, zero chance. There's zero chance that the technology is going back in the bottle. The genie's not going back in the bottle. We are moving to a digital world. Every stock, every bond, every currency, every commodity, every piece of art, every collectible, every piece of real estate, every private business, all of them will be tokens, not little gold shiny things. A token, not a JPEG, a token is an entry on a ledger. Cryptographically secured ledger, public ledger, better transparency, better economies. And this idea that we're not going there is crazy. And is Bitcoin going to be part of that? 100%. I can make the argument that Bitcoin is going to be the base layer of the Internet of Value, the same way that we're using TCP/IP right now, right? We are using TCP/IP right now. And Vint Cerf didn't get rich off of it, and Tim Berners-Lee didn't get rich off it. Zuck did by building an app on top of it that he stole from the Winklevoss twins. But the reality is now you can own that base layer. You can own that base layer. And I don't know, maybe Filecoin replaces FTP. Maybe Ethereum is www. Maybe it's Polkadot or Cosmos or Solana or Avalanche in the middle for HTTP and SMTP. I don't know yet, but I'm pretty sure that Bitcoin is the base layer. We've already built great layer twos on top of it. We've invested in a bunch of them. And this idea that we're not going to exchange value across digital rails. And my favorite line of the last couple of years is the guy that said, all this stuff in fintech, it's a misnomer because there's no tech. There's no advance in tech. We're using 80, 90-year-old payment rails, Fedwire, banks, ACH, Visa. I mean, Visa runs on a mainframe computer in COBOL. Just let that sink in for a second. COBOL. And the joke is, he says, yeah, it's nice because it's a moat because no one knows how to code COBOL, so they can't hack us. But the problem is when it breaks, we literally got to put on a light at the Sunnyvale retirement home, and an 80-year-old comes over to fix the computer. And he's not joking because my 84-year-old dad can code COBOL. No one else can. So anyway, I digress. But Anthony's asking exactly the right question. And we all know the answer. And just like Mark Andreessen said in early 2001, when Pets.com died and eToys died and all Puma Tech died and Digital Island died and all these companies died, he said, all of these ideas will thrive. Chewy.com, it's the same business as Pets.com.
Yeah.
It just needed GPS tracking. It needed broadband. It needed all of the things.
Remember web vans, Mark?
Webvan. It might be something like Amazon grocery, like Whole Foods. So yes, all these things are going to happen. We are going to operate on blockchain. All of it. Everything we own, our identities, our stuff, all of it can be digitized and recorded on blockchains. All of it. But we got to get across the chasm. And the problem is, in 2001, if you remember, 2000 was not the tech wreck. 2000, the market was down 6%. It was 2001, early 2001, when the fraud came out. and Cisco admitted that they had cooked the books. And suddenly Enron and WorldCom found out they were fraudulent. And the market went down another 16%. But that wasn't even the problem. 2002 was the big drop. That was the 22% drop. Now, part of that was 9/11, but part of it was the bond market blew up. And that's what's coming, right? That's what's coming. The bond market.
And you and I still kept our hair. See, ultimately, it really does come down to that. You know what I mean?
Yeah.
And Anthony, I just to jump on what Mark said, this is no longer, is this going to happen? This is happening,
right?
1,000%.
Nope.
And if you think about, the 99, eToys, Webvan, et cetera, you can't put together a budget to say the innovation budget to distill the internet is going to be this much, or to kind of make blockchain be a thing is going to be this much, or back when they're doing railroads, it was going to be this much. You need innovation, you need effervescence, you need risk capital, and you need all that to burnish these new rails that come out the other end: railroad, internet, telephony, blockchain, et cetera. So we are in that cycle, but the cycle is actually a monumental cycle, a generational shift of how we do stuff as a society. And it's going to be tokenization. I think there's 4 kind of pillars in my mind. There's tokenization, financialization, coordination, and automation. What does that mean? Tokenization, just like Mark said, every asset, every analog asset, so your home, your car, your dog, artwork, all this stuff is going to be tokenized. And it's going to be more efficient to financialize. And so tokenization goes to financialization. What is that? It's DeFi. So I have all this stuff now. I want to put it on a treadmill and have it work for me while I'm sleeping. I want to be able to leverage it. I want to be able to get liquidity, all these things of financialization. So we're kind of seeing the first and second part of that. The third one that's coming into focus now is this coordination. And you're seeing that with DAOs to say, okay, as a group, as a treasury, as a new railroad, whether you're Helium, whether you're an investment DAO or whatever, now we have to coordinate ourselves to build out these respective networks. And there's going to be a lot of tooling, a lot of innovation around these DAOs and how we coordinate around these tokenized networks and communities. And then the fourth one, which is still a ways out, is how AI and machine to machine does this. Because tokens are cool for us, all of us on this podcast to be trading and moving stuff around, but it's actually really good for AI and machines, like a lot better. And once those rule sets and the programming of that gets set, it's literally going to be insanity. So we've got a lot of work to do to get there, but that's kind of the roadmap, certainly in our minds, and on where we're going. So there's going to be a lot of ups and downs, obviously, to get there. But it's again, I view this as a generational opportunity for builders and investors. And
man, I could listen to Matthew all day. And anyone rewind the tape, please go back and rewind the tape and just listen to what he just said. That is what this is all about. But I'm going to remind you of one other quick thing. So, Mooch said something about, we've been here through the 87, just being euphemism for being old. Now he looks so much better than me, and I was really pissed.
There's a lot of Botox involved. Let me tell you something.
Your anniversary pictures were pissing me off,
and I'll
dude.
refer you to my dermatologist the next time you're in.
All right.
I haven't gone the full Madonna filler shit yet.
All right.
Trust me, if I need to,
that's when they give you the lift.
All right.
Lift.
All right.
Full stretch.
Well, all right. Okay. I'm going to talk to you offline. But here's the thing. In 87, a friend of mine who was a year behind me at school had gone into a professor's office at ND. And he said, Professor, the crash just happened. How do you feel? He says, happiest day of my life. Guys, what are you talking about? The market just fell 25% in a day. He says, well, look, I am now guaranteed excess returns because there's a certain amount of return. In order to get excess returns on the upside, you have to have downside volatility. We just had the downside volatility. It's upside from here. That's something that most people can't do that math, especially in the moment, right? When things are collapsing around you. And look, there are definitely situations, and Luna may be one of them, where that doesn't apply. That it really is so badly broken that it does go to zero. And
it's a penny right now.
And Enron, yeah, and
it's a penny.
A penny, right? And so there are examples of things that, but the market as a whole, these are the times you need to step up. And I talk about this all the time. If you make an investment, like 3 months ago, if you make an investment and you feel good about it, you're probably going to lose money. If you feel really good about it, like so awesome that you're bragging about it, you're going to lose a lot of money, like a lot of money. If you make an investment and you feel bad about it, you probably make some money. If you feel sick to your stomach, I mean, Scott, you tweeted this out yesterday. Like I
was literally almost puking when I was buying yesterday.
When you feel like that, you will probably, not always, but probably make a lot of money, because comfort is the enemy of alpha. Comfort is the enemy of returns, and you don't make money in comfort. And look, I'm guilty. We made some investments over the last few months where I plugged my nose, and we made some venture investments at valuations that I knew were stupid. And it makes me mad, because the discipline is to be able to walk away when you know something's wrong. And now we're going to have those hard conversations about down rounds and all kinds of stuff. But the future is really, really bright, and I've been this excited since 2001, 2002, like Matthew said. It's amazing.
I just want to add one thing. We did a conference in the Bahamas 2 weeks ago. We called it Crypto Bahamas. I teamed up with FTX. We brought 2,150 people there. And I did a lot of these one-on-ones with people. And I asked one of my partners, they count up the capital that is being deployed in, let's call it Web3, and look at the intelligence, the intellectual capital plus the capital. And in my life experience, and again, I have made a lot of mistakes, guys. I mean, we could go to the White House career if you guys want to really know about a gigantic one, okay? And I've been humbled by life, and I've been humbled by markets. But one thing that has been unstintingly true and somewhat axiomatic, when you have that amount of capital and that amount of intellectual capital and resources, talent going into something the way it is going into this right now, it is quite reminiscent of Web 1. And what happened in Web 1. And so you could sit there in March of 2000 and say, I got burnt. The NASDAQ went from 5,000 to 2,300. I'm done with Web 1. Or you can stand there right now with the discipline that you need to do what Scott did yesterday while he was nauseous, and buy into the highest quality things that are going to change the landscape of the world of tech over the next 10 to 15 years. That's the decision. For me, I look at it, I cannot believe the talent that has come into this space. And now you have that talent intersecting price opportunity. And so for me, I am, very, very bullish and very excited about where we're going.
Anthony, the gathering you had in the Bahamas was incredible. It was, star-studded, and a lot of the people that were in that room, a lot of us haven't seen each other for 2-3 years. So it was like kind of a homecoming. But the talent, the new talent, the intellectual capital, I feel like the battery pack of crypto, Bitcoin, Web3 just gets charged more and more every day that happens. If you look at, your conference and just kind of doing an overview, and I remember you saying that on stage, you look at governments adopting the sovereign wealth funds, pension funds. Again, this is like kind of a freight train, but it's not, it's not a steady line, forward. But that piece that you mentioned about the intellectual capital, human capital coming into this space is incredible. The best and brightest, and then even in government, the people that show up when you meet with agencies, they are the smartest people in that agency. They gravitate to it, So from government, from, corporate balance sheets are adopting this, and obviously people have taken a hit over the recent past. But the form factor to do that, to go to their boards and put their treasury into it, is a step in the right direction, and we're going to see that catalyze going forward. Yeah, we're in a weird moment right now, but if you kind of look back over the shoulder, the milestones that have been achieved over the last year, and if you kind of whiteboard those out, it's like, yeah, I want to be a part of this. I 100% want to be a part of this.
And Matt, first of all, thank you for that. But Matt, also, while you're saying all this, the FANG stocks, all of them have moved into bear market territory. So it's not just Bitcoin, it's not just DeFi, it's not Web3. The world is correcting right now. And so in the rubble, there's going to be fortunes made and unbelievable businesses created and tremendous opportunity. I want to be there with you guys as a very big part of that over the next 5 and 10 years.
Yep.
What I find very interesting is that critics look at the time you're talking about, late 90s, early 2000s, and say it was the dot-com bubble. Crypto is just like that. It's going to explode and die. But anyone, I think, who views it reasonably says the biggest companies in the world came out of that bubble, right? So it's like you said, this is the greatest opportunity. You just have to buy the right stuff, right? You don't need to buy Luna when it goes down to $4. That's probably going to zero. But if you buy Bitcoin or Ethereum or anything else that you're passionate about, I just see that as a favorable comparison that people obviously often use to critique our space.
I think that is the key point here. Also, the point that Mark made before is the other one, which is we have a bifurcated market. There's Bitcoin and there's everything else. And it's really important to understand why it matters. And I'm going to put it in the key word here that starts anyone who reads Satoshi's white paper, the one word that comes out of that is trust. And we all understand that Bitcoin investment more or less is a investment that is correlated most to distrust of current centralized institutions from the government on down. And the ability to transact with trust with someone who you don't know is an unbelievable advancement for society. And I heard Mark talk about this. Mark, some of your speeches, you gave me goosebumps because you have an incredible passion. I mean, consider me. I mean, 5 years ago, I didn't know what Bitcoin was. My son pulled me into coin routes and said, "Hey, let's build something to help people trade this stuff." Right. So, Ian was the one who got me in. And then once I got orange pilled, it became really obvious. Now, that doesn't make me a Bitcoin maximalist because as I think Matthew said, there are many, many other use cases. And the realist thing about DeFi that people need to understand, and it's not trivial, and I don't know that we're there yet, but the current financial system for financing everything, and Mooch, you know this, is unbelievably closed. Your hedge fund pays ridiculous amounts to your prime brokers to borrow and lend stocks. The capture made by a cartel of banks in everything to do with financing, whether it's equity securities lending, interest rate swaps, it doesn't matter. I mean, we all know the lawsuits and whatnot about this, the class actions, etc. It is a massively closed system. Massively closed systems are also inefficient. They also leave out billions of people. So the promise of DeFi is to unlock the financial system for billions.
I love that.
And that is what's being fought for. Now, when you do that, you're going to have missteps. It is a big, big undertaking. And it's just like, I don't want to go through the litany, but I lived through the internet bubble, and I'll still remember things like Net Taxi, which the year before it was Net Taxi with Swan Valley Snowmobiles, and it went to a market cap of $100 million from $800,000, and then went right back again because they promised to create a community. Well, okay, but communities are obviously worth a bit online now, wouldn't you say? And it wasn't that one, but the reality is out of the rubble, we will end up with two things. We'll end up with a trustless method, base layer, as you call it, but a trustless method of exchanging values digitally, and that's Bitcoin. And you will end up with an entire ecosystem of businesses that are in DeFi, which are unlocking the potential in the financial system. Now, it's not a straight line. It never will be a straight line, and don't expect it to be a straight line. That said, what happened in this is a classic example of why self-regulation in the industry matters, why better disclosure matters, why better education matters. But killing the industry when it has this incredible potential would be one of the greatest tragedies of any government action ever. And I think that that's the perspective that needs to happen here.
No, so well said, David. And this is, again, there's nothing new in this world. This has happened over and over and over again. And the incumbents are going to fight. They like extracting the rents from Mooch and I in our hedge fund strategies. They like having the world all to themselves and making fat profits. They like owning DTCC and getting a piece of every $1.8 quadrillion that gets settled every year on that layer in using 400-year-old technology, like physical pieces of paper in Dallas, Texas, that are turned into QSIPs that we trade. Illogical. And you said even more eloquently than Eric Schmidt did, that what Satoshi, whoever he, she, they are, although I guess he identified once as he, so maybe it's a he, but probably more than one he. What Satoshi did is not just create Bitcoin. That's awesome. But what they did is this idea of creating a unique asset in the digital world. And to Dave's point, a lot of businesses are going to be built on that idea. And Eric Schmidt, I don't know, maybe he knows something about technology. I don't know. But here's the big thing is follow the talent. As Mooch said, this is all about talent. And I lived and invested through the last wave, right? We invested in Yahoo, in eBay, in Google, and invested in these incredibly talented people. We invested with Sequoia and Kleiner before they were brand names. Not because we were geniuses, we were just copying everything that Stanford did when I was at Notre Dame. And we were a little bit smart, maybe, but they were the geniuses because they sat right next door to these people. And the talent migration then from 96 to 00 was unprecedented. We'd never seen people leave banking and consulting and industry to go into this crazy internet. And Bryant Gumbel was like, what is the internet? What is that little @ symbol? And Krugman, it'll never be more important than a fax machine. And, don't quit your day job to go work in this stupid industry. Okay. And here's the thing. We had Web 1, Cisco, Microsoft, Intel, the area under the curve, right? Between the x-axis and that curve. It's a lot of wealth, right? Then we have Web 2, near the curve. Okay. That was companies like Alibaba and Netflix and, recent performance notwithstanding, still worth a lot of money. Apple, first, multi-trillion-dollar company, just a network. Amazon, just a network. They don't make anything. Just a search engine, matches buyers and sellers. Amazing stuff, though. Okay, changed the world. That's Web 2. And think about this. Think about a parabolic curve. Okay, we're about to go exponential because of the talent, and the area under the curve of Web 3, mind-blowing. And it's because talent. So I gave a presentation right before lockdowns in New York, and this kid comes up to me afterwards. And I got up there. I'm like, look, I'm so happy to be involved, and I get to hang out with all you young, smart people, and it's energizing me. And he said, hey, would you call my mom? I'm like, what? He says, my mom thinks I'm an idiot. I left this big law firm to go to work for this crypto firm. Would you call my mom? I'm like, yep, let's do it. We called his mom. Said, no, he is really smart, and he's doing great.
My mom thought Goldman Sachs was a law firm, just so you know, Mark. Okay, keep going.
There you go. There you go. But it's so unbelievable. If you hang out for even a little bit of time with these founders and these people who have technical expertise. Look, I'm not a techie. I'm not an engineer. I'm a financial services guy. But what the internet did to media and commerce, blockchain does to financial services. And financial services is bigger. It's more comprehensive, and it's more integrated in our daily lives. And everything of value is going to the trust net. Okay? It's a term I've been talking about for years. It's the trust net, just as Dave and Matt have said. It's coming.
Yeah. And the other thing, when you describe Web 1, Web 2, Web 3, Web 2, if you think about it, right? And we're telling our grandkids about it. It's like, yeah, that was built and financed on ads that we never really looked at. I mean, what call a spade, right? Like that, right side of Google, top right corner. Like my brain doesn't even look at that. But this is what financed Web 2. That's what gave us all these amazing products and services and got us organized, coordinated. It's like all this coordination technology with social and chat and everything else. But the real, you're so spot on, Mark. The real change agent for Web3 is owned assets and owned communities and owned railroads, and that ownership piece of that is a game changer, and it goes into the fabric of the people that are jumping into this space. Because on one hand, it's an economic juggernaut, no question about it. But when you kind of peel the layers, the vast majority are purpose driven. I want to see that future. I want to be a part of that change, and that is the real kind of catalyst. It's kind of what got me into this space when I was, I never, I was building software companies as a VC, but I never had this element of, it's going to change the world. I was like, HR systems or whatever. It's like, all pragmatic, product market fit stuff. But here, this is like a change the world stuff. And so that's what's really, the new dynamic here. It's all going to change.
Well, I want to add one thing, because we haven't even talked about this part, because Matthew just gets me even more excited than I already am. But we haven't even talked about the fact that Bitcoin allows us to opt out of this corrupt financial monetary system that we're victimized by every day, right? We get paid our wages, and every day they steal some back through inflation and devaluation of the currency. And Jimmy Song, if you haven't seen Jimmy talk about this, go see Jimmy Song talk about this. What happens when you free yourselves from the slavery of wages and fiat? And that's an intentional term, and it's charged, and people don't like it when you use the word slavery. But when you release yourself from that and you put your assets in a deflationary asset rather than an inflationary asset, it frees up creativity, and communities become economies. And now I'm going to go way deep into this whole nonsense of Malthusianism and the WEF crowd that we need to depopulate. We want more people. Humans solve problems. Humans create new ideas. Humans create wealth. The more of us that have more time, because we're not fighting to make a buck that's getting stolen by inflation, the more we can come together as communities and be iterative. Again, the mind just blows. And I'm being hyperbolic, not intentionally, because this I can't be hyperbolic enough for the amount of unlocked potential that's ahead of us.
I mean, people always make the argument in the traditional financial world, and I go back to the fact that I've been called insane. Certainly 5 years ago and 4 years ago, people thought I was completely insane. When I left IHS Market after which I was there after 2 Sigma, and then before that was Citi and Solomon Brothers and Morgan Stanley, yada yada. But the reality is, they all thought I was crazy. But when you actually start thinking about it, all of that crowd, we've been conditioned to accept the fact that inflation somehow is good because there are people who need inflation to be good. If you look at the single greatest rise in standard of living in the history of the human race, it happened during a period of deflation caused by the Industrial Revolution. The internet was the next big deflationary force, which allowed us to have low consumer inflation. But because we were inflating the money supply the whole time, massive asset inflation, which of course is awesome if you're the people who own the assets. Awesome if you're the feudal overlords whose castles are getting more valuable, while the peasants are basically not, basically getting, being placated because we're doing wealth substitution. We're substituting cheap capital for labor, so people can't earn as much, but your goods are cheap, or spending the money to offshore. And so, we've seen all of that stuff, and we kind of know that's what's happening. And I've had arguments like with Joe, the stalwart, on this. And look, the reality is, if there's one thing that has blown up over the last couple of last 6 months, hopefully we'll never hear about modern monetary theory again.
Oh God.
But the reality is we will, because what the Fed is going to do, the reason they're going to backtrack and stop raising rates is they're going to realize that they need cheap capital to fund the infrastructure that is necessary to recreate those deflationary forces. Because honestly, at this point, they're going to blame supply chains. They're going to come up with some rhetoric to do it, but they're going to. Make no mistake, they can't afford to have real interest rates be positive in this world where all the debts in all of the G7.
Look, I mean, Dave, I gotta emphasize this. Like, the Branch Covidian cult is bad. The WEF cult is worse. But this cult, the Kelton cult, the modern monetary theft cult, is the worst of them all. The idea that you can print money out of thin air and increase prosperity. If that were true, every country in the history of mankind would have done it. I have in my office a 100 trillion Zimbabwe dollar bill. 100 trillion. And it wouldn't buy a loaf of bread. So the idea of modern monetary theft is so heinous. And the idea that there are supposedly intelligent people who worship at her feet, it actually makes me sick to my stomach, because that is impoverishing a generation of people to the feudal overlords. And the only way to fix it is to get rid of them all, start over, which is really hard, but we got to start somewhere.
I mean, I have been in every one of those cults except for the Stephanie Kilton cult. Okay, so let me just talk about somebody that's been in every one of those cults. Okay, so first off, what Dave is saying about the money center banks and the, that oligopoly is 1,000% true. And as somebody that grew up in a blue collar family, it always incensed me, which is why I started Skybridge. I think Mark would probably remember this. Skybridge was started to give access to retail investors to hedge funds, because I was like, why is only these super rich people getting the access? I need my cousins that are in the auto glass business or making pizzas here on Long Island to also have access.
I didn't know that. That's super cool. That's a great to hear. But
that's why I started the thing. We have over 10,000 clients at Skybridge. Some of them are panicking right now. I got to calm them down. As Mark knows, everybody is a long-term investor, especially these wirehouses, until they have short-term losses. The minute they have short-term losses, they want to put your head on a spike. It's just so stupid. But as being a member of these different cults over the course of my career, here's what I would tell you is that anything that is technically decentralized is sturdier and more everlasting than centralization or autocracy. Anything. Okay. And let's start with the U.S. government. Okay. Like or dislike the U.S. government, it's one of the most decentralized governments in the world, which is why it's lasted the longest. Okay. And when you get an autocrat or central authority, they have a tendency to wobble or do long-term irresponsible things. Somebody 50 years from now is going to write about the Federal Reserve circa 1987 to 2022. They're going to say, okay, they were short-termism in their thinking. They wanted to smooth over economic cycles with easy money. And a result of which they blew the goddamn system up, because now people have lost faith in the system, because a laborer like my dad, who was a crane operator for 42 years, got his money stolen. He made the money on the crane. They gave him the money, but the money was worth less a year later. If you gave him $1,000, he had $920 worth of purchasing power for the $1,000. It's not fair. The system isn't fair. The centralized autocratic system is not fair. And that's why there's a population of people, starting with the Satoshi programming group, said, okay, we can make this fairer. We can make this more decentralized. As a result of which, if we do that, we're going to empower a lot of individuals. And what Dave said earlier, when you empower individuals, you unleash an unmitigated level of prosperity. Okay, if you're sitting there centralized, socialized governments, the USSR, Cuba. You can't get anything done. But the more libertarian the idea is, and the more push it is to people. And by the way, I used to sit in these stupid classes at Harvard Law School, and I would listen to somebody. I looked at the guy who was like, let me tell you something. There are buddies in my neighborhood that are smarter than you. They just happen to be putting in rock, okay, because they didn't have the opportunity. They didn't grow up in your family. They didn't get the handshake at the boarding school. Okay, they're putting in sheetrock, but they're as smart as you. So why don't you take a chill, okay, and let's empower as many of these people as possible so that we can raise their living standards and create a lot more prosperity and happiness. All right, I'm off my soapbox, but that's my decultification message. Okay.
Nah, two thumbs way up
in there. Yeah,
awesome.
massively.
Yeah.
I just want to reiterate something that I think everyone in this room, everyone in this panel knows, and I always talk about it this way. You know, look, my father was not. He didn't finish college. He was a paper salesman. He actually is the only person I know of that pulled all his assets out of the equity market before the '87 crash. He ended up, playing, being a pretty good poker player and blackjack player. The reason I got into blackjack and card counting was he asked me to read Beat the Dealer. And then I playing for literal nickels, won $60 from him. And he realized, okay, wait a minute, this shit can work because the math is good, and so I know a lot of people like that. And he always used to say, and this doesn't really apply today because it doesn't exist, but he always used to say the mailrooms of corporate America are filled with Mensa geniuses. And what he meant by that is that there are a lot of people out there with a lot of intellectual horsepower. And yeah, there's some people who refuse to use it, but you shouldn't be based upon your credentials. I will tell you that every single time, and we've just built an office down here in Miami, every single time we've had work people in, whether it's to put in the soundproofing or install booths or install furniture, every time, and they're of all walks and creeds of life, let's put it that way. Everyone, they see our logo and they start talking to me about crypto. They're either interested in it, they're in it, they understand it, they realize it's a vote against the government system, and this is broad based, and it is. And Ryan likes to talk about the stats that it's disproportionately owned more by minorities than by by the people who own the equity markets. These are very important points, and it goes right to what I guess we'll call you Mooch. I don't know. I don't know you well enough to know what you are.
Hey, Dave, I've been called a lot worse. Okay, trust me.
Your point is
All of us. Yeah.
Even by family members. But go ahead, keep going.
My father's poker game, we're all Jews and Italians, and you're one of the only other people I've ever heard make that comment.
You know what Mel Brooks said, Dave? After 60, the Jews and the Italians are indistinguishable. I thought that was great.
Yeah, that's true. But anyway, the point is that it really is about the individuals. It really is about empowerment. And, look, there will be a delinking here. I mean, the FANGs versus Bitcoin will not be linked for that much longer, maybe another few months, but people are going to start to realize where the fundamental differences are. Yes, there's going to be a shakeout among other crypto assets. And yeah, there's going to be a lot of tribalism because we all know what goes on, maximalists and blah, blah, blah. But look, the bottom line here is that this incident is, if anything, going to make the ability to trust what the asset that you're buying and understand it more important, not less important. So I saw people saying, is this the death of Bitcoin? And I actually think, no, when cooler heads think about it, it's going to be, okay, well, $1.5 billion of Bitcoin had to get sold. Sure. And some of the Bitcoin that's been staked that may not be in places that people are as safe as they want it to be may get sold. But the absolute reality is the demand from smart money for Bitcoin for what it is, that base layer, is going to increase. And to me, it's an incredible opportunity. I don't know about timing. I'm not saying it can't go much lower. I don't know. I mean, I personally seem to think that we're in a pretty strong area of support based on what we're seeing in the market over the last few days. But who the hell knows? But
who knows? Hey, Scott, thanks for
we all gotta go, guys. Yeah, I know.
No, I gotta jump. But anytime I get to hang out with this trio, it's a treat. And you too, Scott. So I'm going to give you a howl. I'm going to give you one howl before we go, because this is the Wolf of All Streets. And look, it is time to howl. And what I mean by that is it is time to believe in this transition and to take advantage of the opportunity And look, it's scary and it makes you sick to your stomach, makes you stronger. If it was easy, it wouldn't be as much fun and it wouldn't be as profitable.
Everybody would do it. Yeah, that's exactly.
Everybody would do it, right?
We got to dig
All
in.
right. Thanks, y'all.
Guys,
Great to be with you.
Thank you so much.
Thank you, guys.
Thanks,
Thank
everybody.
you, everyone.
Thanks, Scott. Cheers.
My parting thought for everybody was going to be, so what do you guys think about if they had taxed our unrealized gains at the end of last year? That would have been fun, right? Woo! Yeah, everybody would have paid gajillions of dollars on their unrealized gains and now would have no money to pay it. Luna currently trading at about a half a penny, 0.006. Absolutely nuts. Absolutely crazy. So guys, I mean, yes. I don't even know how to summarize conversations like that, except for to just be in awe of the intelligence and breadth of knowledge of the guests and the fact that they, frankly, were willing to come on this little YouTube channel and have that conversation. It's, I'm endlessly humbled that I have the opportunity to talk to this people, and frankly, that all of you show up to watch, you know. And it's always, listen, you guys know I never harp too much on numbers or whatever, but it is encouraging that over the last week, when things have been bad, that we have, obviously, I only say increasing numbers and engagement because that means there's more people coming together who are sharing a, you know, common experience, unfortunately, in this case, a negative one, but coming together for solace and information, you know. And I think that I, just like the rest of you, I just come here to hear the perspective of other people. For you guys, that may be me sometimes. For me, it's my guests. And for you, it's my guests as well. All I can say is that I will continue to deliver this level of content. We'll do these round tables every week. So please, guys, subscribe to the channel. I didn't say at the beginning, I don't really harp on it, but, you know, subscribe so at least you have the option. You'll see the alert when these things are happening. Also, guys, the newsletter is completely free. Yesterday's, I feel like I definitely, as I said, had an exorcism. Today's, I followed it up with how to buy the fear and why, when you're buying fear, you need to do it on irrational fear and not rational fear. It's easy to say, buy the dip, buy the blood, you'll get rich. But if you're buying the dip on Luna, that is rational fear. There's a reason that an asset like that is dumping. You want to find the things that are dropping because the whole market is, but haven't fundamentally weakened. I believe that's the case, obviously, with quite a few assets and, of course, quite a few companies, right? I bought Bitcoin at 33. I bought Bitcoin at 30. I bought Bitcoin at 28. I filled a little Bitcoin at 26. Little taste. Had those bids there, and I ain't leaving them. I ain't leaving without them. You know, I've also bought some stock, and I bought a whole bunch of altcoins too early yesterday, as Mark alluded to, that I felt like puking. But for the people who come on Twitter and say, oh, you're an idiot, it's going lower, they dunk on you, you're at a loss. I clarify, I'm buying as an investor. What happens within 24 hours of your purchase is irrelevant. The nature of buying the dip is that it's going to probably continue dipping unless you have that God tier moment where you buy the dead ass bottom, which you do not. Nobody does. They'll show you the one time out of 100 that they do on Twitter so that they can get clout and more engagement. Everyone's guilty of it. Everyone's guilty of it. We all do it. We all like to celebrate our wins, but very few people share their losses and their mistakes, right? So guys, I will be back. I'll be back tomorrow. Same time. Back tomorrow, same time, 9:30 a.m. Eastern Standard Time. I'm not sure if we have any guests or if you're just going to have to do this. Do this. And also, this is something I haven't really discussed with my team. So, hey, whatever, man. Monday, I realized, is the 500th issue of the Wolf Den newsletter. 500 times I've woken up at 4:30 in the morning to write that thing. My God. It's unbelievable to me that it's at that point. And to celebrate, I'm definitely going to be giving some stuff away. Listen, my portfolio is wrecked, but I still feel very fortunate, and I want to pay it back to you guys. So, you know, I'll find a way to do some sort of giveaway and give back on Monday in celebration of 500 issues. 500 issues. So guys, subscribe to that. Subscribe to the channel. Thank you guys so much. I will see you back here tomorrow morning. Peace.